Hello, hello, hello. What's going on, everybody? Welcome to Al Stock Trades. So I'm in Michigan right now. I don't know if you can see the snow behind me. It's really beautiful here. I'm in West Michigan. Beautiful place. Uh, Great growing community. Great place to buy properties and do some real estate. Um, so I'm in a sweater. In this video, we're going to go ahead and do some due diligence and research. This is going to be a pretty good video. So we're just going to go kind of get right through it. I made a PowerPoint slide for you guys. We're going to go over this. For folks that haven't done so, take advantage of the Black Friday sale. It will be ending. Coupon code Black Friday. Get $1,500 off for lifetime access. But yeah, we're going to do some good research here. But first, let me just kind of talk to you. So we're going to talk about kind of the rule, the rule of the 10 best days, and then we're going to go in and talk about some really good stuff here on these graphs. But first, what I wanted to do is I wanted to just talk to you guys about something. So over my time in Michigan here, I saw this lady named Melissa. She went ahead and posted this on LinkedIn regarding access for CMS. She's actually one of the leaders of this access model for Centers of Medicare and Medicaid. This is CMS, not specifically this here, but CMS is what basically pays Clover Health. So I went ahead and I read what she had to say, I wanted to give a respectful response. Again, I'm not a CMS expert. I am not. I am not a managed insurance expert. I leave that to the experts like Andrew Toy and Vivek. But what I can speak of, what I'm confident in speaking in, is patient care. I think I'm still learning, but I feel like I can take good care of patients, and that's what I'm very proud of. So I went ahead and I pushed out this response. I just pretty much try to stay in my lane and be respectful. I said, hey, thank you for sharing this. As a fourth year medical student, I'm really encouraged by your work. You're leading with access, especially knowing your husband is a, primary care physician. I know your post could not include every example, but I wanted to flag one more group, Counterpart Health, a subsidiary of Clover Health. Obviously, this is everything you guys know. It uses a clinical support tool called Counterpart Assistant. It has been shown, to diagnose essentially, early type 2 diabetes detection, better chronic kidney disease management stability, and COPD, chronic obstructive pulmonary disease. Management and fewer readmissions. As a professional, I said, for transparency, I am also an investor in the company. I know that is unusual for a medical student, but for me, it reflects how strongly I believe in this approach as a future physician who wants better tools for patients and clinicians. I mean, I want better tools for myself, right? I want Counterpart to be able to be used in Arizona. I want this thing to spread everywhere. I want to go practice in any location, and I want to be able to use Counterpart. I want to be able to use that for my patients. I want it to summarize the hospital visits so I can take care of my patients, right? I want this, right? I love the software. This is just for me as someone who takes care of patients. I want this. Like, this is not like this will make my life easier. A lot of rural communities. I just went to this, and I'm going to see if I can, for all the Clover Health people that are watching that work at Clover, one of these days I'll reach out to you guys. I really would want. There's a Christian clinic. Obviously, later when you guys are, when everything's perfect and set, but there's like this nonprofit Christian clinic that doesn't have a lot of resources. They can't afford an EMR, and they take care of patients that are not insured, and it would be so nice. We're still using paper documents, and that's nice too. I mean, there's perks to just using paper, but it's just to get those folks that don't have a lot of money, to give them like AI. I'm hoping that maybe I might be able to cover it for them, or just maybe get a discount or something to have it there, which is really nice. I think poor people deserve, people that can't afford health care insurance. I really think they deserve the best, and they're human, and I want everyone to get access to the best technologies. It's not just the rich. And that's Clover missions as well. Uh, so yeah, I pretty much said, you know, um, I would be grateful if you could, if your team could, look at their data and white papers, and I hope you will see the same potential as I do. And um, I'm very like really proud, and I'm very, hey Blaine, you made my day. This, Blaine is he's the growth and partnership at Counterpart Health. He went ahead and liked my post. So that's really nice. Why, for me, is it nice? Well, I started from homelessness. Uh, I came from nothing, guys. I literally came into Tucson with nothing in my hands. And I'm probably nothing in my brain, just the faith in God, right? And here I am now. I'm at a position where I'm able to advocate for patients, and I'm doing something really interesting because I realize that there's a lot of administrators in healthcare, and the physicians are drowning in work. I mean, this is just a this is abuse. This is just abuse, in my opinion. This is just straight abuse, guys. And it is an honor that someone who came from nothing is part of this small group trying to help patients and is advocating and getting. So I like it's thank you Blaine. I mean, you're awesome, dude. And I'm very happy that I'm able to advocate. And again, I'm not an expert. I'm no by means. I'm not a spokesman of Clover Health. I'm just a medical student who happens to invest, and I support their mission. And it just feels good to be able to learn from these people, learn from I can't wait for Blaine to start posting about his view on access, and Andrew Toy. I've learned a lot from these people, and I think that it's made me a better future doctor. So I just want to say, and also thank you for all of you folks on YouTube and our lifetime access members, because your voices matter. And for me to just be in this position, I just want to say, thank you. I mean, it's really nice to be able to, just to to have purpose, right? So it just feels really good. So I'm very proud, and it just feels good that someone who, like myself, never had a voice, uh, I feel like now I do. And that was the whole reason of becoming a medical doctor, um, was to be able to have a voice, to be able to speak out for these rural doctors and these rural patients that don't have good access, that only have 1 to 2 OBGYNs in the whole freaking city, or so it feels really good. So yeah, so thank you, Blaine. You made my day, so appreciate you, man. Okay, so with that, let's go ahead and um oh yeah, let's quickly talk about yeah, past 5 days, don't been doing pretty well, but you might be asking what's going on, like why. I'm gonna explain. um so very quickly, uh next week, hold on. Yeah, next week I pay leave. Fact check me, but next week I think is the FOMC meeting. I've been traveling. I'm in Michigan, guys. I'm been traveling, but next week is the FOMC meeting. So there's going to be a rate cut, I think. And it's really weird. We went from having a rate cut to not having a rate cut to having a rate cut. So, blah, blah, blah. So that's actually uh, um, really bullish. And small caps have been rising. In fact, they're almost nearing a new all-time high, if not have already done so. And that's why Clover Health is going up, in my opinion, right? So you could see, because Clover Health is part of the Russell. Makes sense, guys, right? I mean, it's not rocket science. But now I just want to just take a moment here, and let's do some data. And then, guys, listen. Uh, um, if you have any questions or just want to talk, again, I'm not a financial advisor, guys. I'm just a guy who's just sharing his journey. I found a way out of poverty. And I'm just trying to share it with you guys. And I built like a software so I can share it with you guys and just you know, that's pretty much all this is, guys. I got tired of the poor getting poor and the rich getting rich, and you know, I'm just trying to advocate, uh, and that's all. This is a really good um PowerPoint slide because I feel like it'll give you some experience. So the title is "Staying Invested in a Volatile Market." So there's something called the rule of the 10 best days. So the S&P 500 earns a large share of its gains in just a few trading days each year. So literally within 10 days of each year, the market earns the most of its money. And the problem is a lot of people like to time the market, but how do you know which are the 10 best days? It is very, very difficult. So missing only a handful of those days can dramatically reduce long-term returns. Market timing sounds attractive, but in practice, it often means missing the most powerful rebound days. And it's just hard. And I'm telling you guys, I mean, you might be able to catch it here and there, but in the long term, you're pretty much gambling, right? Okay, so we're going to give you some data, data driven, right? So since 1928, the cost of missing the best days. So staying fully invested in the S&P 500 has historically produced an 8% annual return, which is pretty good, right? Some years do good, some years do bad, but overall, it's an 8% annual return. So if an investor missed out just the 10 best days over that period, the return flips to around negative 13% per year. Isn't that insane? So if they were to stay fully invested, they would lose 8%. Sorry, they would gain 8% annual. So they'll be making bank since 1928. But if they miss out on the 10 best days, they would be negative 13% per year. They would go bankrupt. That's why a lot of day traders lose money. Okay. That's why day trading is a gamble. Okay. Long term investing is where it's at. Okay. Now, that is a performance gap of roughly 2,100 basis points, right? From 8% down to 13%. It's about 21% down, purely from being out of the market for just a few key days. Like imagine the people that missed the April 7th low, right? Obviously, if you make some VIX and you do the VIX, if you like add some data with the VIX volatility index, where the hell is it from this here? Then you're able to determine kind of when is a um, wonderful time to just like when the VIX is over 50, you can essentially be able to, and it goes ahead and does the data. When the VIX is over 50, you could see here the software here, and this is all included for lifetime access, one-time payment, and you get access to all this data, which is like I just keep shoving stuff in this, and I just want to make so much value for you guys, and I just want this to be better than a 4-year bachelor's degree, right? So, but you can see here the little yellow circles are the signals of when the VIX goes over 50, and you can see it's historically near the bottom. So, so obviously, like there are ways to use like methods to figure out when to dollar cost average a little bit more concentratedly, but overall, a lot of retail investors are not as sophisticated to have this technology. So if they miss the 10 best days, then well, they're screwed because you flip from positive 8 annual returns to negative 13. And that's why a lot of people say, hey, the stock market, I lost money because they're missing the 10 best days. So so now let's look at 2016 to 2025. Something interesting happened in 2016. Irish Vanity mentioned this a long time ago. He's one of our OG members. And he said that for some reason, a lot of stocks from like 2012 to like 2017, or really 2012 to 2015, 16, they weren't really moving. They're just like still. If you don't recall, look at Nvidia, look at Tesla. There was a lot of non-movement happening. It was kind of like a dead couple years, and it was boring. And all of a sudden, after 2026, technology stocks started to rampage and roar. And that was really a wonderful opportunity. So if you go to 2026 and onward, if you were to have been remained invested in the S&P 500, Um, uh, um, you know, it would have delivered plus 14% annual return, almost double, really, than the 8%, right? So, but here's the thing, though, excluding just the 10 strongest days, that drops to roughly 9% per year. You see how like non-investing for those 10 best days literally drops your return almost by half. That is even a larger gap of the 2,300 basis points, underscoring how brutal market timing mistakes can be. So that it really drops your return. So 2025 sentiment, you really have majority of the year, a lot of investors were pretty bearish this year. So if we were to analyze, because we're almost coming to an end for 2025, investor mood has been broadly bearish for most of the year. So if you have felt cautious or negative on equities this year, you have been in line with the typical retail investor. Now, I don't mean this as an insult. Again, this is an educational platform on Wall Street. These are not my words. These are what these assholes have coined. This consensus or retail view is often labeled as dumb money. We instead treat it as a useful contrarian signal. So and that's what Wall Street does. So now let's talk about hedge funds and professional money managers. There's going to be some performance chasing now. It's amplified the impact of the November sell-off, so forcing many funds to de-risk into weakness. And right now, I believe there's going to be a year-end Christmas rally. We had October, typically now called Uptober, and then we had a really terrible November, and then right now a lot of funds are not as good as and you can, by the way, you can use and look at the portfolio hedging modeling system and track that, because that's pretty much hedge funds. Those stocks have been picked through an algorithm that I back tested and designed. um and this is, if you want to know what hedge funds are doing, that is a key indicator of hedge fund activity. um and it was able to predict the sell-off we had before April 7th. So think of it as like a, what are hedge funds thinking? And you can see right now they're either at par or underperforming the S&P. So that's going to lead to some performance chasing, and a lot of them threw in the towel in November. But now stocks are about to go up, so this might be an opportunity for them to chase. Because if you look at 2025, and it's one of the weakest years for active fund performance, with roughly 75% of managers lagging their benchmarks. So this might set us up for a really good year-end rally. But the problem is we don't want to get too caught up with this, because let me explain. If you look at the American retail investor, the American Association of Individual Investors, AAII, and if you look at the bears have been really high, near 48%. And you could see that corresponded with that dip here, right? But then all of a sudden, we are starting to rise and almost make new highs. And you could see the bears have been pretty much retreating. The bears have pretty much had their foots in their mouth, and they've been basically leaving. And this is a very significant drop. And if we were to then go deeper and look at smart money versus dumb money, you can see dumb money is just exploding. And this is most likely going to be leading us, I believe, into a very heavy year-end rally. Um, and there's a problem here. And I'm sorry if there's questions. Please ask questions. Listen, guys, ask questions. Like again, I'm not an expert. I've been, I mean, I like this. I guess if you compare me to the normal American, I guess I'm pretty well thought out in this. But I always like to look at myself as not an expert, so I can continue. So I can keep learning. I want to always I like to live is to learn, right? So if you have comments, comment. If you think I'm missing something, comment. Just it's Friday night. Let's have a discussion, guys. Let's talk. And if you guys want to hop on the live, let me know. I'll put a link and we'll talk. So let's have a talk. I mean, you know, it's, it's kind of boring. Let me just talk to you. Let's have a conversation, right? So what was I going to say? Yeah, so pretty much the bears are retreating right now. Let me drink some coffee here. All right. So now that we talked about that, now let's go back to the presentation. So policy tailwinds. Hmm, I'm a little well, eye twitch there. I'm dehydrated. Let me drink some water. Too much coffee. Yeah, yeah, that was a big gulp. Okay, so um, the Federal Reserve is positioned to begin cutting rates in December, with quantitative tightening set to end. That's like two, and they just like increased the. Oh man, there's so many things that the Feds are doing right now, and it's very bullish. So they stopped tightening, and they're cutting interest rates now. Then Clover's going to be a triple dragon next year if, what they announced in Q3 2025 is what happens in 2026. I mean, like, it's like for all the people that are biology majors, it's like when the you have the estrogen and progesterone, and then when that egg is able to go in the uterus and it's just a nice plump endometrium from all the progesterone, it just plumps right in there and it sticks. That little egg sticks right there, and it's ready to get, it's already fertilized. It's a zygote, and it gets implanted, and it's just a beautiful environment. I'm sorry, I'm relating this to conception, but I blame pro integrated analysis for talking about ICU. So I think we're gonna just talk about this. But what the point is this is just the perfect, beautiful example. This is just, it is so damn good right now. It is just, macro is good. Rates are going down. Quantitative tightening has ended. Triple dragon is coming. I mean, this is just the only negative is the 3.5 stars for 2027. If they were only 4 stars, and we already know long term, it's okay. Long term, they're going to end up basically being 4 stars because of the whole administrative. We talked about that 12 administrative things are going to be removed, but oh man, I just wish they were 4 stars because oh man, that would have been just like so sweet. It would have been like so good. um and then the part D, of course, but like but it's okay, it's fine, but it's such a perfect environment. um yeah, so anywho, now, equities became technically oversold in November with RSI readings hitting their lowest level since April tariffs. So, ooh, scary. But the thing is, if you look at April 2025, there were clear fundamental reasons for fear. Today's sell-off looks more like positioning and sentiment than a change in the long-term story. So, a lot of our lifetime access members, they were very bearish in April. And you know what, guys, I don't blame you. Um, there was a fundamental tariffs. There was a fundamental. We did not know how tariffs would impact the market. There was a fundamental reason for your bearishness. So it was just so weird that retail investors bought the dip and institutions did not. So that was a little weird. But you know, so I think we deserve a big, the seat at the big boys table now. But if you were bearish in April, I don't blame you because it's Um, I knew that, they made like this thing where, oh, we're going to help out Main Street, not Wall Street. Come on. And then we like realized that was all a joke. And then Trump was like, I'm not looking at the market. Shut up. Of course you were. Um, and then he was just talking, just a sideline here. Trump was like talking about his MRI, and he was like, they took an MRI of my head, and I got the best head in the world. I got the best cognitive test. I got a full score. It's something that, and he talks to the reporter. It's something that you can't achieve, and I'm just like, Jesus Christ! And I was like, this guy. If I was the reporter, I would have been like, okay. I'm like, were they? I'm like, did they find a heart in there? I think he would have enjoyed that, but yeah. But anyway, that yeah. Anyhow, that's really hilarious. But Trump is hilarious. Trump is like, I don't look at the market. Get out of here. All right, now seasonality. December often finishes strong. So historically, December is one of the stronger months for equities as year-end flows. and position support risk, especially when November's down. Whenever you're above about 10 to 15% in the market and November's down, there's about a high probability. Again, historic results don't often, correlation is not equal causation, but from the quantitative perspective, if we look at the past, you would have a year-end rally just from the probability perspective. So, given the depth of the pullback in November, any move back towards neutral positioning can fuel even a stronger December. So I'm pretty much well positioned for that. But the overall kind of if we want to kind of just bring it back, missing just a few days in the market, best days can turn a strong long-term return into a negative one, which is kind of scary. That all it takes is just 10 days, which is insane. And you've seen it, right? But it's insane. So people that try to time the market, there will be a time where you're gonna realize it's just the date. Like it's like this. It's like, well, we go ahead and we do this medical intervention, and then you would say, well, my neighbor didn't do the medical intervention, he survived. But you got to look at the just large numbers in the long term. You might get screwed, and I would hate for myself to get screwed because I know the data, and it sucks because if you know it and you still decide to do it, you have no one else to blame. You're like, damn, I'm stupid, right? And I've done that. I've been stupid, and now I just learned from those mistakes, and I'm just sharing them with you guys. And just as my opinion, take it as a grain of salt. Now, 2025's widespread bearishness and underperformance from active managers create opportunity for disciplined investors. So with the Fed shifting policy and equities coming off oversold levels, you know, I see December as a window where staying invested, not timing, is really an edge. But anywho, if we were to turn ourselves to technical analysis, do you remember the clown market back in 2021? Well, we broke out of a new time high, and then we fell in the April low, and then we went ahead and recovered to old new time high, and we dipped here for November, and then now we've had a really strong couple of weeks here. The last 2 weeks has been a big rally for the Russell 2000, and if you don't think this is paralleled and pegged to Clover, then let me just show you the past 2 weeks. The past 2 weeks, Clover has been up 23.15% or 19.44%. So you could see how important, you could see you know the parallels here, right? So it's not rocket science, right? And the idea here is, are we going to go ahead and kind of finish and break out? And it seems as this lower level now has become a support level. So it'll actually be interesting if we do this. And I'm gonna go open up the questions right now. Let me open up questions here. Let me fire those up. But let me think. What else do I need to say? Um, I just gotta process some things here. Okay, I was gonna say something else. IWM, the rebound. I was gonna say something. We'll talk about this later. I've been wanting to talk to you guys about this, but yeah, I'd rather talk to you guys right now. Um, yeah. Oh yeah, I remember. Yeah, so if we were to go ahead and take a look at this analysis, guys, we're doing pretty well. We're in the 2009 era right now in this rebound, and you know, um, I think especially the IWM, you could see IWM. We've underperformed the 48%, so I think we're going to have a very strong next next that um the next couple of months. I think since April, so the next couple of months going into April, I think we're going to be up on the IWM, and we could go up to 2,800, and that's pretty good because right now the IWM small caps, um I don't know what price it is right now. Let's see. just 2,500. So we could see 2,800 guys, and that's all new all time high. So imagine what's going to happen with Clove, right? Especially once they become profitable. You see, and then the rates go down, and oh man, it's going to be good. Then you got Carvana joining the S&P 500 after them going to becoming a triple dragon, right? Again, triple dragons, guys, they're real. They're real. CVNA. You can see what happened right here. Let me just zoom out here. This is all part of lifetime access. You guys can get access to all this data. One-time payment, lifetime access. There's no way. There's nothing out there that gets you all this. So operating cash flow turned positive, free cash flow turned positive, and net income turned positive all in 2023. So this one's easy. It's just 1 year. So you look at CVNA, and then as soon as the inclusion happened, it went up another freaking 8%. But watch, look at 2003. It wasn't a triple dragon, but once it became a triple dragon, it went from $4.74 all the way to over $439, and that's over 8,000% return. So that's a lot. That's a lot. So if you were to say 439 divided by 474, that's a 725% return, 725x. So if you would have had, let's say $10,000 invested, you would essentially have just $10,000, right?
7,250,000.
That's 7.2 million. If you would have had $100,000 invested, that would be, which is insane.
72,500,000.
That's 72 freaking million. If you would have had $1 million invested, you would have
725 equals 725 million 00000
725 million. Freaking criminal. And imagine the options chain. Oh my god, guys, oh my god, the options chain. Like, I just want to take all this money and just start giving it to the poor. You know what I mean? Like, man, this is criminal. It's terrible. Dude. Just kind of, and this is why I want to be able to show you guys this with the software. But you could see how 2023 they turned positive, and then it did pretty well. So now the argument is, what does Clover look like? Well, okay, Clover, it's operating cash flow 2024 free. But the problem is net income. It's just a double dragon, and this year it's probably just gonna be a lower double dragon, not a strong one. But then next year, if it's a strong triple dragon, this could be the start. This could be the start of the starts, and that's gonna be so sexy. Oh man, I just can't wait. This is gonna be so freaking fun, dude. Because we're like the only people talking about Clover Health, and just been doing this research. And there's about 900 videos, and everyone's like, there's no way. But look at this. Look at how negative they used to be. And look where they're now. Guys, we're about to flip the script. We're about to flip. It's coming. Okay. It is coming. And once it comes, it'll be the largest. Finish it. It'll be the largest finish, right? Okay, so let's go ahead and let's go ahead and go to the questions. And if you have questions, all right. So the last rate cut saw short-term downside, but overall, long-term, it's good for markets. And but I agree. Yep, start getting some hedge fund guests. Turn you live into the problem is I have so many guests that wanted to be on. I have so many guests. Oh, fuck, man, it's just been so bad. Just been because I'm in Michigan now. I do lives when I have time, but I do a lot of lives. But like I do it when I have like the most it's like 10:39 right now in Michigan. Here are my dogs and the cat, right? But it's like 10:39 right now. And obviously, like I'm out in Arizona right now, time, so it's Michigan. So I have these weird hours where I'm available to talk with you guys, and it's hard to schedule something. But once I finish, because medicine's tough, guys. Medicine is tough, and obviously that comes first. But once like medicine is done, and I can be done with the training, then I'm gonna be able to have guests on, and but it'll be fun. It'll be fun. Oh, that'll be fun to bring on Dr. Burry. I think first week of January, a lot of profit taking from Wall Street don't want to claim any more gains for 2020. Yeah, so we could have a year-end rally, and then we could do the profit taking, and then we would be talking about the rule of 2 to 3%, like we did last year. It just replicates, and I have to look it up again because I was forget. It's like if it gains a certain amount of percentage points the first 30 days of the month, it's a prognostic indicator of what the full market's going to look like. So we'll do that analysis, we'll do that research, and if you watch the videos in the beginning of the year, we talked about it. But I think that if we were to have a downtrend, I do think that healthcare stocks are going to be kind of the contrarian investing. But the problem is from what Humana said, they're going to recover in 2028. So we'll see. It could be a little more of a long-term hold, but they could. Wall Street can just say, screw it. They're recovering now. We'll start putting in money. Again, I don't know. But yeah, I think there's going to be a lot of tailwinds for Clover next year. So I'm very excited. But yeah, so if you guys enjoy this, give us a thumbs up. Helps with the YouTube thing. And yeah, I hope you enjoyed this presentation. For folks that are out there, we're the real deal. We've been, I think, our stock trades. Wow. We have been in business for 4.5 years. 4.5 years. And in about 6 months, it'll be 5 years. Huh. It's pretty cool, huh? So yeah, no, take advantage. We will be increasing prices when the new year comes. It'll go up to $5,000, and it'll subsequently go up from there. So yeah, take advantage. Get yourself lifetime access. Come join the family. This is one of the biggest sales. alstocktrades.com, and yeah, have fun, man. It's a good environment. Lots of great people. We love to learn, and it's it gets passed down to your children. So I'm trying to aim for at least generational knowledge, and hopefully the knowledge brings wealth, and that's the dream. And we've been I'm seeing it, and it's working. So but who knows? I mean, if America stops making money, then right? But Warren Buffett said never bet against America. So listening to him, I'm just trying to create generational knowledge here, and hopefully that will create a seed to build a tree, and that tree, hopefully, we can learn from the Rockefeller family. So by your third generation, they don't lose it. They'll have this knowledge, and they won't be stupid to lose the money that you've made. So they can continue to keep growing the money, and we can actually, do something. And this is a beautiful legacy to leave for the next generation. So they don't have to struggle how we struggled to because guys, it took me like 6 years to make 100K. Probably a little bit more, but that was a long time. 6 years, guys. It takes about, on average, it's about 10 years, 8 to 10 years to make that first 100K. And then it takes another 5-10 years to if you're lucky, to make $1 million. And then from that, right? So it takes a long time. And for me, I just I accelerated it because I just read, but I only accelerated it by 5 years. So I doubled the rate time. And then since I doubled it, I'm like going on Moore's law now because the way I'm investing. So yeah, so it's good. So I've been doing this it's gonna be about, how many years have I been doing this? Let me think. Let me see. How old am I now? Once you're above 30, you just don't even, you know what I mean? Yeah, you don't even check anymore. It's kind of like I don't want to know. Shit, man. Yeah, we're going on 15 years, guys. We're going on 15 years. So it's crazy, man. Like, I look back to see where I came from, and I'm just like, holy shit, man. Just like, Because I live day by day. I just put one brick as perfectly as a brick can be laid. I just can't do that every single day. But I look back and I look at where I came from, and it's like, would I want to do it over again? Hell no, dude. I would kill myself to. I would not want to do this again, dude. I would not want to do that over again, dude. That was just painful. To come from where I came from, dude, and do this all over again, it would be like purgatory. Holy shit! Just kind of looking back, it was like a grand. I feel like I'm like looking at the Grand Canyon. You know what I mean? Um, damn. So anyhow, 15 years of just investing. Obviously not doing it perfectly in the beginning. Like just like I was the biggest dumb. You think dumb money? If dumb money had a picture, it would be me. I was the biggest dumb money guy. It was dumb as shit. That was what I was. Um, I sold a stock because I read it on Yahoo Finance, Yahoo Conversations. They said something and I sold because I thought they were being honest. That's how stupid I was. I believed what people said because I was always saying the truth. But I thought people always, yeah, yeah, yeah. Yeah, I know. We are great gray haired brothers. Isn't that crazy? Yeah, I know. Yeah, I have a lot of gray hair here. You can't see it because I shaved. But I got a lot of gray hair. Yeah, it's stress. Life. Wait, hold on. When do you think Clove will go back up after? Yeah, the options change. But the thing is, the options changes really quick, right? I would say they can give out Q4 guidance, and maybe that might help. But I would say, obviously, like if Clove goes, if the Russell goes up, Clove is going to go up. And if the market goes up in Russell, then of course, um, I personally think, I am again what I expect. The market doesn't care what I think, right? But I'm thinking that it might go up in May when they become profitable, which is why that unusual call buyer put that bet. And I agree with that bet because of the triple dragon. So I would say until May, but the market is smart, so the market could figure that out, and then it might go up before that. But um, I would be surprised if it's not up in 2026 by Q1, Q2. I would be very shocked. Obviously, if there's like some war, God forbid, if there's something macro event, then of course, but from that perspective, I think, yeah, I didn't see her comment. It was hidden with the other one here. Um, but yeah, so crazy. I was walking down the street here, cruising down the street on my 6'4". That's what it sounds like. But I was walking down the street, and dude, I saw this carriage with the horse, and there were two, or maybe one. I think it was two horses, and they were white, and it was snow everywhere, and it looked like these horses came down from the heavens. They are the most gorgeous horses I've ever seen in my life. And you could ride in the carriage. And I just wish I just wanted to go up to the horse. They were working. I just wanted to kiss them on their whole head. I just wanted to give them 1,000 kisses and just kiss them around the lips. I know it sounds weird, but those horses were so freaking beautiful, dude. I just wanted to pet them and just kiss them. I freaking love those horses, man. So beautiful, dude. I've never seen horses like that in my life. I really want a horse. Be nice to have a farm. Just yeah, horses are amazing. Um, Anywho, yeah, I'm with you on that. Maybe Q4 started good. Yeah, yeah, exactly. It could happen. But I think Q4 is gonna be pretty bad. So that could, retail investors, that could cause some turbulence. I mean, we could have a little run and drop just like we did before. Um, but maybe that the guidance will. But again, they didn't really care too much about the guidance for Q3. So okay, it's so hard. Yeah. Yeah, take Michelle on that ride. Yeah, I wish she's not with me right now. She's she's actually studying for STAP. Ideally, I really wanted her to come, but Yeah, she was studying. But yeah, I really want to take her. I want to come back and take her here. Traverse City is beautiful, guys. If you haven't gone to Traverse City, Michigan is so beautiful. West Michigan, beautiful. East Michigan's beautiful. I mean, all Michigan is beautiful. And yeah, man, I wish I took a picture of that horse. One thing that I was not proud of was I saw a homeless man sleeping in the corner on the snow. That was upsetting. Uh, um, so I think we can do better as a society. It's not fair. The best. Most. Come on, man. I'm making all this money, and then you see this guy on the street. What the hell's going on, dude? Um, you know what I mean? Just like you have billionaires and all this, and at least we shouldn't have anyone sleeping on the street. Um, so anywho, yeah. Don't quote me, boy, because I ain't say yeah, easy eat, right? Reference to the song earlier. Yeah, absolutely. Right, cruising down. Yeah, uh, yeah. But all right, good. Oh, sorry. Perfect. Um, yeah. So I was just talking to someone, but yeah. a- Anyway, guys. I think overall, um, it's gonna be a fun adventure for all of us. Um, it's gonna be fun. We're gonna This is going to be well documented and adventure. And the beautiful part about it is everything we've done has been about education and in service of someone else. And whether that's on YouTube, whether that's the education, whether that's micro homes for the homeless I'm building, whether that's me becoming a doctor. I mean, it's just I live a life of service, and soon I'm gonna start getting into high schools, and I'm gonna start creating a book club for them to read, and then I could meet with them every 3 months on my week off, and I could just say, all right, what'd you read? What'd you get from this? And a lot of these kids are not going to read the book, but I'm gonna have like a PowerPoint slide, and then I'm pretty much going to basically be able to teach them about this stuff, and that'll be really rewarding. Um, and hopefully it sticks. Hopefully, I'm trying to figure, like how do I grab their attention? Maybe I can like buy a Lambo. Like, well, I'm about to buy this Lambo. It'll come next week. You guys will see it, and that'll grab their attention. Maybe I don't know. And then they're like, if you want to, if you want to get a Lambo, listen to Warren Buffett. I don't know. Try to find something that will get them entertained. But yeah, the goal is trying to take this knowledge and give it to kids, and because the future is uncertain. A lot of these jobs are going to be gone. And I don't think the government's being honest. So yeah, we got to invest in. You got to invest in your own disruption. So one last thing I want to leave to you guys. This is a quote that I just recently read. It's a really nice quote. Um, to conduct the orchestra, you must turn your back on the audience. To conduct the orchestra, you must turn your back on the audience. So again, to conduct the orchestra, you must turn your back on the audience. So the guy who conducts doesn't look at the audience; he looks at his people. I'm sure you've realized that you're investing, you're working hard. People are your family, friends. They're like, what the hell is this person doing? You can't focus on that. Okay, people are gonna make fun of you for doing people are gonna make fun of you. Okay, a lot of people made fun of me. They're like, oh yeah, you want to be an investor? Ho 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 ho, right? And then now they look at me, they're like, oh shit, right? because I turn my back against. I don't care what people think, right? You got to find people that you mesh with and that have a growth mindset, and you stick with those people. Okay, right? That you stick like master the chin. You have a growth mindset. Okay, want to stick with these types of people. These are growth mindset people. Okay, all right. Dish with his reading. These are growth mindset people. All right. Make the sign up with the parents' account and do the same. Some real estate investments. Yeah, it's a pretty good idea. And just show them, hey, I'm about to buy this house. Rather than a stupid car. That's probably a good idea. Probably be a better example. But all right, guys, appreciate you all. God bless you, and I will see you on the next one.